This is the FCTO Weekly Review and Outlook for March the 24th, 2013. Cyprus was the centre of focus last week, but we'd like to point out that despite the turmoil in Cyprus and weak economic data, the euro's sell-off was rather limited. Indeed, there was some strength for recovery towards the end of the week as euro-US dollar closed at 1.2983, not far from the 1.3 psychological level. Cyprus's situation seemed to have some breakthrough after the European Central Bank set a March 25th deadline to emergency liquidity assistance support. And positive news from Cyprus could have the euro pick up some strength for a rebound initially this week. Nonetheless, would be cautious as some near-term resistance levels in euro pairs need to be violated to confirm underlying strength for a rebound. The latest news regarding Cyprus is that the Parliament has approved 3 of 8 measures on late Friday to secure the international bailout. A solidarity fund will be set up through nationalisation of pensions. Capital controls will protect the banking system when banks are due to reopen on Tuesday. A restructure plan will separate bad debts in troubled banks. However, the Parliament still needs to vote on the plan to raise €5.8 billion. Latest reports showed that the likely scenario would be a 20 to 25% tax on deposits of more than 100,000 at the country's biggest lender, the Bank of Cyprus. The Cypriot President flew to Brussels on Saturday for talks with EU leaders. Purchasing Managers' Index data from the Eurozone was generally disappointing. Eurozone manufacturing PMI unexpectedly dropped to 46.7 in March, while services PMI dropped to 46.5. The data indicated a deepening contraction in the Eurozone economy. Market noted that the PMI data suggests that the economy would contract 0.3% in Q1 of 2013. Germany's manufacturing PMI unexpectedly showed contraction by dipping to 48.9, while services PMI also dropped sharply to 51.6. The situation in France was worse, with manufacturing PMI unchanged at 43.9, while services PMI dropped to 41.9. Also, Market noted that digging into the data shows increasing schisms within the Eurozone. National divergences between France and Germany has widened so far this year to be the worst seen since the survey began in 1998. Germany is on course to grow in the first quarter. In contrast, France's downturn is likely to deepen, bringing the euro area's second largest member more in line with the periphery than with the now solitary-looking German core. As expected, Fed officials left the policy rate unchanged and the asset purchases at $85 billion. Policymakers acknowledged improvements in economic development since the January meeting, but indicated the still high unemployment rate would be a hindrance for the Fed to achieve its dual mandate. The staff projections were downgraded modestly to reflect restrictive fiscal policy and downside risks to growth. Bank of England minutes revealed that the Monetary Policy Committee voted 6-3 to keep the asset purchase programme unchanged at £375 billion. Governor King and MPC members Miles and Fisher voted for a £25 billion expansion, but that was voted down as the majority of members saw that additional stimulus would lead to inflation expectations drifting upwards, and unwarranted depreciation of sterling if it were misinterpreted as a lack of commitment to maintaining low inflation in the medium term. The Reserve Bank of Australia minutes for the March meeting were in a dovish tone. Together with the comments from Deputy Governor Philip Lowe a few hours before the release of the minutes, the Australian dollar dropped against the US dollar in anticipation of a further rate cut from the central bank. However, policymakers decided to leave the cash rate unchanged at 3%. Important events such as Ben Bernanke's speech with Mervyn King, US durable goods orders, consumer confidence and more housing data are among the major market movers this week. For updates on all this, along with all other Forex news affecting the markets throughout the week, please join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.